What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. What a wild day in the market, by the way, all over the place. I feel like I say that pretty regularly now, but we saw a huge gap up today, and then it went red. Now things are mixed around. We'll get into some of that, but also the big story today is Apple. There isn't a whole lot of earnings to really react to because they're really small companies that most of you probably have never heard of. So we're going to talk about Apple today and determine whether or not this adds significant value to the company, the stock. What are your thoughts on whether or not you're looking to buy Apple? If you haven't done so already, do you already own it and you're just going to continue to hang on to it? I'll get all your thoughts on that, guys. But before we get into anything, as always, let me hit up the starting five. What's up, Savvy Money Show? Jeff Ponica, Alexandra Sproles, Lexa, and Snookeroo. You guys are a starting five. Welcome to Own the Chaos. First of all, guys, I appreciate all of you hanging in here with me this afternoon. It feels like it's been forever since I've seen you. However, in the meantime, I shortened up the beard. Do I look younger or do I look the same? Do I look fatter? I feel like my face looks fatter now. I have a fat baby face. Do I look like both? Do I look fatter and younger? Is that possible? Let me know in the comments. I don't even know if I want to know. But we do have some stuff going on with Apple, obviously. The Worldwide Developer Conference was today, and Apple revealed a whole ton of stuff. We'll get into that as well. I have Melanie Hutchinson already chiming in saying that it's always a buy. Snooker says no comment on the beard. Comment on the beard thoughts. But let's take a look at Apple right now and just kind of see how it's trading. It was down 4% on Friday. Here's what it's looking like right now on your 5-minute chart. And it is just barely in the green. It was actually up around 2% at one point. You can see earlier in the day it was doing really well and everything rolled over. Then it tried to work itself out. Then it rolled over some more, started to make its way back, and it's just barely green right now. I'm looking at the overall indices at this point. And we have the Dow that's down 30 points. The S&P's barely in the green. It's only up 6 points. NASDAQ's up 18 points. You know, there's just, it's basically flat on the day is what we're looking at. A flat day is pretty much what we're looking at. And I think it's more or less how the day is going to end. We only got about 10 minutes to go. So Gilbert says, not fatter, looks good, dude. I appreciate it. Thanks. I might keep the short beard. You know, I always try to change it up. Sometimes I'll have long hair and sometimes I'll have short hair. Sometimes I'll never have no hair. The hair's staying. But sometimes I have a long beard, short beard, whatever. The only time you ever see me without a beard is if I get in a fight with the trimmer. That hasn't happened. Knock on wood. A very long time. It has happened on this channel, but it was a long time ago. Go search out those videos. It's actually a treat. Apple a day keeps the debt collectors away. Love that. Appreciate that, Froggy. All right. So yeah, Apple, like I had mentioned earlier, had their Worldwide Developers Conference. Some interesting stuff. You know, I'm not an Apple user typically, but I obviously know enough about them to invest in them. I'm a PC guy myself, and it always cracks me up, you know, when Apple starts talking about new developments to Apple, right? It's new to Apple, it's new to Apple users, but some of the technology has been around forever. Some of that is present here in the conference so far, and some of the reveals that Tim Cook has released, but some of it's not. Some of it I actually was impressed with, and I'll talk about some things that, you know, if you are an avid PC user or Android user, as I am, you might find some things that are interesting about this as well, because I kind of did too. But there are definitely some things here I'll just shake my head at, like, oh my God, you got to be kidding me. Like, you know, it always is that case, right? Never in my life as an Android user did I ever have issues listening to headphones and charging my phone at the same time. Those of you who have older iPhones or had iPhones in the past might understand that reference. There's just some really weird stuff, excuse me, that Apple has done in the past. And of course, they never innovate anything. They're always stealing technology from everybody else. But listen, one thing they do really well, better than anybody else, is market the shit out of their products. And they do an incredible job at that, and better literally than anyone else. What Carnaweed says, yeah, I hear there's some trouble going on there across the pond. Meanwhile, here in the UK, waiting to see what happened to Boris. Yeah. Um, Don, what's up, man? Hey, Don, you want to come on? I hope that you're free. I meant to call you to see if you were down to come on, but let me know if you're not doing anything. Hit me up. Or let me know in the chat here because I'll see it here before you text me. So don't text me. Just tell me you're free and I'll send it to you. Send you the link. But anyways, so getting into Apple, there's a lot to go over here. Before I do that, though, I really want to invite you guys to check out the Chaos Crew. You can hit the join button next to subscribe. I saw Alexa talking about she's missing the bull on it next to her name. You can see there's a lot of people here that are already chatting that might have those icons next to their name. They're part of the Chaos Crew. The Chaos Crew is a great community to be a part of. You can get access to our Discord group as well as a watch list from yours truly. Every single day, I put out 5 stocks to watch every single day before the market opens. I give a nice fundamental and technical breakdown on one stocks that I think that are actually moving. Today, did pretty good. So I'll just give you an example of one stock that did well. American Express has been doing well. I put this on the watch list a few days ago. I should say beginning of last week and a couple of times after that. I do like to repeat every now and then when I think it's worth repeating, and American Express definitely did that. So you look at the daily chart on this, and I put it on the list just last week at 156. Obviously, it's been doing really well. I just put it on today too. Just turned back to green, but it's looking like it's got a pretty decent cup and handle pattern here on the chart itself. We might see some serious movement if this gets above 170. And there's your freebie. There's American Express. Just looking at that stock, it's right up there with like Apple, right? Like it's one of those stocks you just buy up and you own. But listen, there's setups that just look too good to pass up. And I think I think American Express is definitely one of them. So those was just one of the stocks of the 5 that I put on the watch list this morning. And for those of you who are in the crew, you already got that. You know what it is. You know what's up. So if you guys want to be a part of that, again, the join button is next to subscribe, or you can go and click on the link that is in the chat as well. Would love to have you guys as a part of the crew. Okay, Don, no worries, man. I need to get you on this week, though. Hit me up. I miss you, man. We need to catch up. Need to put in new payment number. Oh, okay. I got you, Lexa. Okay, so let's get on to Apple's worldwide developer conference. If you guys don't know what it is, it's all about catering to software developers. They are the obviously people that create the code for Apple, all that stuff, software, the iOS, all of that, right? And typically, this is when Apple unveils all the new tools, any cool new features that might be coming. And in this case, there was a lot of rumors surrounding around augmented reality and their headset hardware that is comparable to like the Facebook Oculus. They're trying to get into that game. There's still rumors swirling around as far as that's concerned. I hadn't seen anything that was confirmed, and somebody chime in if you saw anything, but I didn't catch anything in the conference presentation to that effect that where I saw that there was any kind of new developments on that front. If they announced that, I think that Apple could go bonkers, but we didn't really see that so far this afternoon. As we get into the close, I'll show you guys Apple again, and I'll run by with you some things that I thought that were worth checking out, and we'll just kind of go through them step by step. So you can see Apple is just barely in the green. It's actually starting to work its way back up. Let's look at the 5 minutes. Starting to look pretty okay going into the close. I'm not going to say good, but it's okay going into the close. Looking at some of the highlights here, though, I thought that there was some interesting things. One of the things was that they just announced the iPad OS 16, its latest software for iPads. This packs in some pretty decent features, and one of them that I thought was really cool. And somebody correct me if I'm wrong, but I don't think this is available on PCs, which I thought this was actually really cool that Apple does this. They have a collaboration feature that lets 2 people easily work on documents together from iPads. This is from CNBC. Users can message one another or start a FaceTime call to discuss what they're working on. And you can also see which tabs users are looking at in the tabs bar. And I thought this was interesting from a collaboration standpoint. it's cool that it's all streamlined, and I think that that's what really kind of speaks out to me the most. One thing that I will say is that this isn't that far removed from like using Zoom, right? I don't think that that's too much of a difference than if I could just use Zoom and do the whole thing, right? But I guess being able to work on someone else's computer just from a collaboration standpoint also is definitely cool. But anyways, that I thought that was a cool feature. There's another feature on the iPad Pro. Apple is introducing a new app called Freeform later this year. It's a collaborative whiteboard app that lets people work on a document at the same time, and it seems a lot like what's been available to Microsoft Office and Google Docs for years. So that's my point. Like, some part of this is really cool that I haven't really seen, but you guys know this. I mean, I work diligently with other people that help me out with content and stuff like that through Google Docs, which is very easy. It's not that big of a deal. So this is what I was talking about at the beginning. Where Apple starts to talk about and really showcase cool features that are they make it seem like it's brand new technology, and then it's like, well, that's been around for quite a while. Sharing Excel sheets and Google documents and everything else. When I had video editors, I would share all of my content through Google Docs, and we would work together on that and do collaborations that way. So that's not really that big of a deal, but nevertheless, it's available on iOS. One other thing that they talked about was Apple's new Mac software called macOS Ventura. This I thought was interesting as well, but not really that mind-blowing. With the Stage Manager feature, users can more easily organize open windows. It groups apps together on the side of the windows, which is something that Windows has had also forever. That's the kind of stuff that like cracks me up. One thing that I will say though is the M2 chip. They unveiled the new MacBook Air with M2. The M2 chip is damn impressive. The M1 was really impressive. Remember, we talked about this about 2 years ago. For those of you who've been following me that long, talking about how they broke up with Intel because they had the new M1 chip, and it is actually pretty damn incredible from what I understand. I don't have firsthand experience on it, but everyone that I know that uses it loves it, and it seems as if it's just as powerful, if not more, than the Intel chips. You guys let me know. But that's what the word on the street is. So they unveiled the M2 chips. Didn't seem like it was that much of a next of a jump from the M1, but nevertheless worth taking a look at and determining whether or not that's going to add a lot more value or not. The chip will include 25% more transistors and 50% more bandwidth than the M1. So that's a pretty significant jump, I thought. Apple's new watch software, and it includes better sleep tracking. Not really that impressive, in my opinion, because that's not new technology. One thing that I thought, and this will have to be also discussed. Let me know, guys. This is so. I have a Jeep Gladiator Rubicon. It's got 39-inch tires. It's a badass fucking truck. There's no other way to describe it. It is a badass truck, but I use the Android, Android version of Apple CarPlay, and it's terrible. I love the fact that I can use it, but it always disconnects, and it's 100% a software issue. It drives me crazy. I hate it. But from what I understand, the CarPlay isn't necessarily as bad. It doesn't have problems. They're making upgrades to the CarPlay now with tons of features for new cars coming next year. They didn't necessarily say what those were, but if they can get a leg up on that, I mean, that is a game changer just from a software standpoint, because the Android side of it sucks. It's terrible. I love it when it works, and you just never know when it's going to cut out. I hate it. Drives me crazy. Let me know what you guys think about that. But Google, just getting back to some of the comments from what I was talking about. Don says Zoom and the Apple ecosystem and how they'll work together is probably night and day different. Potentially. Savvy Money Show, Google Docs. Yeah, Google Docs is always the way to go, in my opinion. Pleased Apple didn't adopt exploding phone features, says Scott Sherwood. Yeah, no shit. Milton Williams, why didn't Amazon skyrocket out of the split after the split? We're going to get into that, And we're still having the over-under segment towards the end of the show. So make sure you're putting that in the over-under segment, because I'm going to talk about that. We'll get back to Amazon later in the show. Don't lose that thought for me, Milton Williams, because I do have thoughts on this. Looks like say that again. Android sucks, says Don. No, that feature sucks. That feature from Android sucks. Need I remind you that I have a phone that folds? See that? Apple's going to come out with it 5 years from now and claim that it's an amazing new feature, even though it's been out forever. But anyway, this is the big. This is what separates Apple from everybody else, right? The seamless interaction with Apple products is on point and makes it so easy to use, and that's what Apple is the best at. They're not best at the latest technology, which I have, which is way better than what Apple's is. But they're better at the interaction with products and how they all make it seamless. That's why people don't leave Apple once they get sucked into that ecosystem. But you know, it is that in my opinion is certainly the big difference maker. Lexa, welcome back. Welcome back to the crew, guys. Lexa is a new crew member, or returning crew member. If you're not part of the Chaos crew, make sure you hit that join button next to subscribe. The link is also in the description. Certainly would appreciate if you guys will become part of the crew and help support the channel. So just getting back to this. Yeah. So more things to reveal here. And with Apple, as we're getting into the close, we're officially closed. Apple just closed up 0.5%. One other thing that I thought was the biggest, I guess, difference maker was that Apple announced a buy now, pay later program called Apple Pay Later. And this, in my opinion, is what the real difference maker was throughout the whole show, the whole conference. And to me, this was rumored to have been a thing over the last year. During that time, though, a firm had already partnered with them in Canada, and it seemed as if they were going to further that relationship. I'm not quite sure what that looks like now, especially considering that they had this out. Let's take a listen here real quick on what they had to say about Apple Pay Later. Maybe.
We're thrilled to announce Apple Pay Later.
There we go.
Apple Pay Later lets you split the cost of an Apple Pay purchase into 4 equal payments spread over 6 weeks with 0 interest and no fees of any kind. And Apple Pay Later is available everywhere Apple Pay is accepted, in apps and online. You can now get that espresso machine you've wanted and pay for it over time with no additional cost. For developers and merchants, Apple Pay Later requires no integration. It just works using their standard Apple Pay implementation. Upcoming payments are managed through Wallet, making it easy to keep track of what's due when and to stay within a budget. And after you've placed your order, we have another brand new feature that helps you track it. Apple Pay order tracking enables merchants to deliver detailed receipt and tracking information directly to Wallet, making it easy to get the latest information on all of your Apple Pay orders, delivered securely and privately to your device. Apple Pay order tracking will be offered at millions of merchants through e-commerce platforms, starting with Shopify.
All right, so you get the point. The one big key difference I thought was that, a firm allows you to make more than just...
Imagine a Kit Kat bar made with less sugar, but it tastes just as good. Nestle said...
Sorry about that. So I think the big key here is that the big difference between a firm and Apple is that a firm allows you to make payments over time much further out than just 4 payments. That's one of the big differences between Apple Pay and a firm. Nevertheless, a firm took a huge hit today, and we'll look at that. That stock was down as much as 6%. I don't know where it closed out on the day. Yeah, it closed down 5.5%. So does this matter to a firm? I don't think so. Just because they have so many other partnerships and the growth here is absolutely insane, that this might impact them to a certain degree. but I don't think this is going to impact them in the long run. Affirm's still very much something that I think is worth taking a look at in my book for quite a long time. I think it's going to be a great long-term hold. I don't think there's anything that you need to worry about as far as the firm's concerned. I still own it, and I think it'll be fine. But obviously everybody knows how knee-jerk reactions are concerned, and to me, I think that's more of an opportunity than anything, because again, this is something that was already rumored to have been in the works for over a year anyway. So there's an opportunity for a firm if you guys are looking at that. But I thought that was an interesting part of the conference, probably the most pivotal. And definitely want to hear from you guys. What do you think about Apple right now and where it's headed? What do you think? Was there anything that stuck out to you that would add more value, that makes you want to buy the stock or just hold on to it? Or is there something that makes you actually want to sell it right now? Is there something in here that makes you, that kind of turns you off to actually wanting to invest in the stock itself? Definitely want to hear from you as far as that's concerned. Because to me, there were some interesting parts about it, but I'm not quite sure there was anything that was just like, oh, wow, this is awesome. This is great. And it seems as if that was reflective in the stock price as well today, considering it closed a 0.5 point or 0.5% in the green. So not really that much of a big deal, right? Go Viral says, sure, let millions of people borrow money during a financial collapse. Smart move, Apple. Are we in a financial collapse? I mean, I don't think we're seeing 2008 right now. Doesn't seem like that. Here comes the bears. Apple will sync with the rest of stocks. I mean, it already did, but we'll I guess we'll find out sooner rather than later. It's down 20% from its highs. Got to 182.44 is the all-time high. Closed it at 146.14. I'm not quite sure we see it fall much further than that. We got a Jamie Dimon sympathizer, Hurricane. Apple should have came out with some smart glasses. This is where, so Milton, I'm in your camp. Like I thought that what might have moved the stock a little bit, or might have gotten investors excited, was if we saw something from the AR side, the augmented reality, right? The metaverse side of things. We've heard some rumors that this, could be in play, what have you. Apple's version of Oculus. If that happens, then Facebook could be in some trouble. Some of the other metaverse platforms as well could also, have some concerns as far as market share being taken away from them. So to me, if they should have come out with something like that. That was something that I was really kind of hoping for to see from them, but nevertheless, we did not get it, and maybe we will eventually, but that was kind of disappointing. People are so if you're gonna, Acidane says it's worse in 2008. If people who are saying this, did you actually live through 2008? I know we're getting a little bit off topic with like the overall market, but I lived through 2008 as an adult, and it was terrible. Not anywhere close to what it is right now. People were not going on vacation all over the goddamn place when the markets collapsed. That wasn't happening. Period. I gotta say, there's some writing on the wall for some tough times, for sure. There's definitely pockets of the market that I would say are in for some rough waters ahead. But I was trading since 2002. Okay, so then you must have forgotten about what it was like in 2008, because it was rough, real rough. Yes, thank you, Darren. Somebody with some sense. I was in 2008. It was way worse back then, 100%. And you know what the other crazy part was, is that nobody saw that coming, and boom. Right now, everybody's trying to talk about a crash. Everybody. And usually when that happens, you don't see it. Crashes rarely happen when everybody's calling it. I don't know if that's ever happened. When everybody and their mother is talking about a crash, it usually never comes to fruition. Oh, you're right. Go Viral said 2008 didn't include wars and famine, except there was a war during that time, and oil was pretty damn high, and everybody was losing their homes. Literally everybody. Actually, I take that back. Not literally everybody. A lot of people lost their jobs. Here's the other thing. In 2008, unemployment was ridiculously high for that time. Not seeing that. We are seeing a slowdown. Not 2008 all over again. Nope. Don't see it. Maybe 2023 we see that happen. Maybe we see a recession. Maybe we see some layoffs happen, but it ain't happening this year. I can tell you that. In April now this is an interesting one. In April 2000, people were probably calling for more downside in NASDAQ when it was already down 20%. They were right, and it dropped 83%. This is a fair point. I don't see the NASDAQ dropping 80% though. 32% is what it came down to so far this year. That might be the end of it. That might be the end of it. Could have said that April 2000, it doesn't crash. The difference between now and then, though, I would say, just playing devil's advocate here. I know we're getting off topic, and I think I've said it. All I'm going to say about Apple, but there isn't. I see a couple of people talking about Coop earnings. We can look at Coop earnings. I didn't think anybody was actually interested in Coop earnings, but we can take a look at it. But I just want to get on this comment. So NASCAR always bringing some constructive comments. I really appreciate these. But the only thing I would say that was different back then was that you had companies IPOing with literally no business, and all they had was a website domain. That was it. I don't think that there's necessarily any of that going on. And the closest that I could say probably was like that was the SPACs that went ballistic, right? Which have already collapsed. The SPAC movement is done, over with, like done. But that wasn't the overall market, and it certainly wasn't the overall NASDAQ, right? So that's the one big difference that I would say separates 2000 and the dot-com bubble versus now. Was there stocks during this time that got way ahead of themselves with high valuations? 100%. I agree with that totally. But many of those have already collapsed 80, 90%. And you could pick any of those. So I think that that's probably the closest comparison, and that's already happened. So I don't know, maybe. I think it was the Georgia-Russia conflict in 2008. It was Georgia-Russia. You're right. I was actually in Moscow when Georgia and Russia. That was a little bit of a scary time. I was wondering if I was actually going to get out of Moscow, which I did, thankfully. Okay. There you go. Go check out Don for the Don Frown Show tonight. He said 2023 is my guest. Tonight's video is what I'm doing to prepare, not to promote. You can promote it. I'll plug you all day long, my man. Ooh, I probably shouldn't have said it like that. Oh shit. That was hilarious. All right. Philly says, love the videos, Brad. Why do you remain bullish? Are we oversold? Any catalyst you see? I don't know if there's necessarily a catalyst. And let me be clear. We're still in a very volatile time. I'm not ready to say that we've seen the bottom of the market. I think that there's a possibility. If you asked me last month, I don't know if I would have said that we are absolutely seeing the bottom. But I think that we're getting close, if we didn't already see it in the month of May. When we take a look at the SPY, at least in the short term, I'm seeing cup and handle pattern here. This looks pretty bullish. Just from a chart perspective. From a catalyst perspective, I think that there's a lot of headwinds. We got interest rates, right? We have the Fed talking next week. We have CPI comes out on Friday. There's lots of reasons why you would want to be cautious right now. That being said, you look at where the S&P is trading on a forward multiple basis, and when you compare it to 1990 to 2010, that 20-year span, interest rates were around 5%. And the S&P was trading around 17 times, which is where we're at right now. Interest rates aren't anywhere near that, and I don't think they will get anywhere near that. And for that reason, to me, that tells me that the S&P is undervalued. I think we could go higher from here. I think it's possible. Everybody's talking about recession. Everybody's talking about stagflation. One key statistic that doesn't spell recession or inflation. We've never seen a recession, never, with unemployment at 3.6%. Never seen it in our lifetime. And to me, I don't think that there's really much to go over, or to really, like, how are you going to dispute that? Are we going to go into a Great Depression with unemployment being where it's at? I mean, maybe we can make that assumption. I guess anything's possible, but I just don't see how we go into a recession with unemployment so low. Just, I've never seen it. Nobody's ever seen that, and I don't know. I don't know where when that bottom would actually drop out, because demand is still ridiculous. Okay. Inflation will kill every stock going forward. Actually, inflation, the best place to park your money in an inflationary environment is the stock market, specifically in dividends. Get into a dividend aristocrat, which is why I've been talking a lot about getting into energy and the dividend yields that they have. PXD, the number one, the highest yielding dividend stock in the S&P 500 is Pioneer Natural Resources. Actually, within our dividend bot, you guys are part of that. So there is no better place to park your money in an inflationary environment than being in equities, in my opinion. Okay, so anyhow, let's see here. Been out of loop for a while. What potential catalyst could lead to uptrend in the market? What do you think is the best strategy for a long-term investor? Thanks, Brad. Appreciate the question, James. And that kind of goes back to what I was saying. So I don't know if necessarily it's a catalyst, other than things have just been so oversold. We saw during some of these earnings that while they gave not so great guidance, and maybe some of them even missed earnings. Case in point, right, was NVIDIA came out with earnings, and they beat earnings. They did really well, but lowered their guidance, and the stock went up after earnings. Let me just show you this real quick. Here's the day after earnings. Stock shot up, 10% that day after earnings, after giving lowered guidance than expected. And we've seen a lot of this. So when you start to see signs that, earnings come in and they're either as expected or maybe even a little worse, and the stock goes up, that's usually a sign that, at least in the short term, we could see a bit of a rally. Could it be a bear market rally? I think that's certainly possible. We could see things roll back over. Not ready to rule anything out, but things have just gone way too far to the other side, especially the good quality companies. And so I think that there's definitely signs that we have potentially seen some sort of bottom, whether that is a short-term or long-term bottom. I think that that remains to be seen. But anyway, that's kind of my thoughts. I don't think that there's one specific catalyst where we say, yes, this is it. However, we do have CPI on Friday. If CPI comes in at a lower than expected number, never in my trading career, and anybody else can certainly chime in who's been trading for a long time, I've never seen so much of a focus on CPI. This is the market moves every month on CPI. Like, that's what moves the market right now is the inflation numbers, the consumer price index. Everybody is obsessed with it. So Friday that comes in lower than expected, watch for the market to rip. If it comes in higher than expected, obviously we're going to see some really troubled times in the market. However, there's a couple of things to consider when it comes to CPI and why I think inflation could be coming down pretty rapidly. Car sales are going down significantly, especially used cars. And so that's going to bring car prices down, which is also going to reduce CPI, which, if you guys have been paying attention, CPI, the majority of it has been made up of used car sales. If used car sales are coming down, the prices are coming down, that's going to impact CPI significantly. We saw a 16% decrease in home sales in April, which is going to bring the price of homes down. And so I think that there are some deflationary pressures. Now, having said that, I also think that there are headwinds, which I've just talked about in regards to the CPI number that could be coming out. Oil prices have gone up, right? Food prices are gone up and probably will continue to go up. And so the question becomes, with some of the stuff that we're seeing come down, is it going to bring CPI down enough, even though we're starting to see some things go up, continually go up? And so that's going to be the big question for the rest of the year. I still remain bullish on the rest of the year because of the ridiculous demand that we're seeing. The crazy part about this is that we're seeing, oil go up. Demand has not, we haven't seen any demand destruction on that front. People are still traveling. People still taking road trips. People still spending money. That's still a thing. In fact, the big question is, when are people going to run out of money and then things become too expensive? Then demand actually gets destroyed. I don't know. That's going to be a great question to ask and to kind of wait and find out. Salaries are going up. People are still getting paid more. Jobs are out there, so they're able to spend this money. It's not like they had a bunch of savings and now they're running out of it. They're still making a decent salary. The big question is, when's the inflation going to catch up with that, and is it going to just create this huge dropout? I don't know if anybody can definitively answer that question. And if they do, then if they try to tell you an absolute, anybody tells you that absolutely we're going to see a recession without a doubt, then I would have a hard time trusting those people. I just gave you both sides of that coin. I gave you the bull side, the bear side, and I chose one, and I chose a team, and I'm team bull. But anyway, okay, so appreciate that. T.I. Brent says, appreciate the stock market outlook, economic rigor, and your willingness to share knowledge. Absolutely. And I don't get it right all the time. I'll say that. I'll be the first one to tell you I get things wrong all the time. Anyways, we're going to get to the part of the show where we're going to get to over under. I do have a new sponsor that's going to be sponsored by, or it's going to be sponsoring the over under segment at the end of the show. So make sure you're hitting that like button, hit the subscribe if you're not already, and we'll get into over under. So the over under part of the segment is, if you want me to determine whether or not I think that your stock is overvalued or undervalued, then you're going to put that right in the chat. Go over under and your favorite ticker, put it in the chat there for me so that I can determine if you want it to be a part of the show. Would love to have you guys in the over under segment. So make sure putting in there over under and your favorite ticker, and I will give my opinion as to whether or not I think that stock is overvalued or undervalued. Would love to have you guys engage with me in that conversation in the over under segment. But yeah. Okay. Everyone forgets the participation rate is very important when we have low unemployment numbers. 100%. I get that. We have the great resignation, right? That's been a big problem. I'm not going to ignore that. But that doesn't change my stance for the rest of the year. Okay. So let's see here. Over under LYB says stop console wars. Let's take a look at LYB. What we got here? LYB. Stock is up. It closed the day up 2%. Let's take a look at the chart here. Closed the day up 2%, and it is trading at 6.5 times next year's earnings. What do they do? Do I know this company? Lyondale. What is that? LyondellBasell Industries? That is a big ass word. Is that supposed to run together like that? You got me on this one. I don't think I've heard of this company. A chemical company operates through segments such as olefins and polyolefins. Whoa. I need to go back to chemistry class for this one, I think. This doesn't tell me a whole. All right. Basic materials, chemicals, commodity chemicals. That's what we need to know. So you look at the stock, obviously commodities have been absolutely insane, and it is potentially here in breakout mode. Look at this. A 107.56 was a high that we saw back in June of last year, literally a year ago, and it's breaking out from that. We saw a huge trough here, and now it's starting to move back up. It broke out, hit 110 last week, hit 109.83 at the close today. It's trading. You know what's crazy with this move? And just recently hitting all-time highs. It's still trading at 6.5 times next year's earnings. It's got a market cap of $36 billion. I gotta say, it looks like it's undervalued to me. As crazy as that sounds, Just because things are hitting all-time highs doesn't mean they can't keep going higher. I mean, we've seen that with the 52-week highs on energy, right? It just keeps cranking. To me, this looks like it could continue to do that as well. I mean, we know that the price of materials and so forth, commodities in general, have continued to go up. I don't see how LYB doesn't do that. Just if I'm looking at the industry as a whole, not particularly the stock, but again, with it trading at 6.5 times next year's earnings, it seems awfully cheap to me. So I'm going to go ahead and say it's undervalued. LSPD, says Wandering Cat. LSPD. This stock, huge drop off from $130, came all the way down to $15 just before their last earnings. And it looks like they might have had good earnings, or at least a good reaction to them. Went from $15 and now has since nearly doubled and closed the day at $27.45. Let's take a look at this one. This is Lightspeed Commerce, offers omni-channel commerce enabling software. It's a software platform. So it's a SaaS, looks like a SaaS company. Trading for a loss still, or operating for a loss, $4 billion. You know what? It looks like a really small company. It looks like they're actually growing pretty decently though. And it looks like those earnings, let me just double check those earnings real quick. I don't want to give you something that is misinformed, or like I'm super misinformed. I don't know the company all that well. I've heard of it, but I don't want to give you something. Let's just take a look at some of the financials here. I'm looking at them currently. Yeah. Operating at a loss of around 10 cents per share, $167 million with a $4 billion valuation. That's actually pretty cheap. I'm going to go that this is undervalued. And given those earnings are seeing some growth, I'd say it's undervalued. It just closed back up over the 50-day moving average last week, and the momentum looks pretty darn good from here. Watch it, though. The risk reward could start to get in trouble here as we get a little bit oversold. But, if it starts to consolidate and hang around that 50-day, could be good for the next move up. I'm going to go on a limb and say that's undervalued. Right. Mr. DeSoto. What's up, my man? One of my old faithfuls. Texas Roadhouse. Interesting. Texas Roadhouse. Anybody go to a Texas Roadhouse? What do we got? Who's ever been to Texas Roadhouse? My favorite thing about Texas Roadhouse, believe it or not, is not the steak. It's that damn butter. It's that damn cinnamon butter and the rolls. Favorite part about Texas Roadhouse. This has been in a pretty decent downtrend over the last year, it looks like, since April of 21. So over a year. Pretty rough downtrend. Is trading at 20 times next year's earnings still, even with that pullback. $5.5 billion in revenue. TXRH. Just looking at recent earnings and how they've been doing. I'm looking at this. It's $1.02 is the expected earnings that are going to be coming out soon. It looks like they just did back in May. So doesn't look like they're expecting a whole lot of growth, and it is a little bit pricey. I'm a little reluctant to say that this is overvalued, though. I think it's probably appropriately valued. I'm going to go with that. I think it's right where it should be. I don't know how much upside it has from here. Hospitality has been rough, man, especially with those razor thin operating margins and having to deal with rising salary and stuff like that. I don't know. I think it's appropriately valued. I don't know if I would say it's undervalued at all, especially with that PE, that forward PE. All right. Enrico Caro, over under on Qualcomm. So Qualcomm, very interesting one, right? And all of semiconductors have been obviously just beaten to hell. Stock right now, this is probably one of the cheaper semiconductor plays, in the families of AMDs and NVIDIAs, in the worlds of AMDs, NVIDIAs, ASML, all of those other ones. This is a very cheap one. Taiwan Semi even. This is trading 11 times next year's earnings. The cheapest that NVIDIA has ever traded was at 28 times next year's earnings, just to give you perspective. And Qualcomm has tons of growth potential here. It's trading at $140 a share, came down and actually hit that 129 area and bounced off of it beautifully. We've seen that bottom before, and it's held pretty well. So I would say that this is undervalued. Closer of the 50-day moving average for the first time in a while. First time since February of this year that it closed over the 50-day moving average just last week, and it's holding that pretty darn good. So if it does that, I think you're in good shape. Watch for the resistance break over 150. But nevertheless, it is undervalued, my friend. Undervalued. Over/under on plug. By the way, I love that you guys are digging this. The engagement on the over/under is pretty awesome. Plug power has been one that has been obviously super volatile. 46.50 is what we saw this at back in November of last year. It's trading at 18.58. I just talked about this with my level 3 crew as far as their KS crew is concerned. And we talked about just renewable energy in and of itself has really started to ramp up. We saw President Biden come out and speak to that today, which is why we saw a huge jump in renewable energy overall. Solar companies and all that were doing really well. TAN, the ETF, was on fire. To me, this is one that's still operating for a loss. They have no idea when they're going to be getting to profitability, so be careful here. But it seems to have at least come to a reasonable level. I'll say it's undervalued for now, but not by much. All right. So there you go, Lexa. I'll accept this too. Go viral. The OUCRWD. CrowdStrike is an interesting one. And I believe we talked about this last week or the week before. We had CrowdStrike on the over/under. It's trading at a ridiculously high multiple at 153 times next year's earnings. That being said, there's actually cybersecurity companies out there that are trading higher than that as far as a forward multiple is concerned. And CrowdStrike is an incredible company, and the demand for cybersecurity right now is at all-time highs. Their earnings were actually really damn good, and they sold off, but I think that was probably because the stock was up like 10, 12% going into the earnings report. It sold off the day after, had a little bit of a more decent day-to-day, is up around 4%, gave back or clawed back some of those losses. Watch for the break over 170. It's still pretty decent on RSI, not anywhere near oversold territory. So this got plenty of room to run. Also, another cup and handle. By the way, this was a stock that I put on the Chaos Crew watch list just this morning. And for all the reasons that I just explained. If you guys aren't a part of the Chaos Crew, I'll put out a watch list of stocks, of 5 stocks before the market opens, of fundamental and technical analysis, ones that I think that are worth watching. So it just so happens to go viral that you put this one on here, and I had that on the watch list today. It's undervalued. I know it sounds crazy, but I think it's worth paying the premium for this, trading at 140 some times next year's earnings, given the growth potential for CrowdStrike. I'm not going to sit here and tell you it's cheap, but I think it's still undervalued. So I like it. Looking at okay. Somebody that bread slaps. Thank you for Texas Roadhouse. Mutt Bob says I like Texas Roadhouse. Good stuff. Oh yeah, I love it, and the bread butter so good. Yeah, for sure. Over under on Drive Shack. This has been an interesting one. Michael Hanna says over under on Drive Shack. So Drive Shack has gotten some real decent movement lately, and we're closed slightly. It closed down 4%. It wasn't slightly. It was slightly in the green last I looked at it today. There's been a lot of insider buying on Drive Shack. It went from $1.09 after earnings, and the earnings were pretty darn good. They talked about a lot of growth there, and it shot up, 70 some percent. Came back down, corrected a little bit, and now is moving right on back up. I think the insider buying that we saw right after the earnings call was first of all significant. It is dirt cheap, and they operate at a loss, so we know how sensitive this is going to be to inflation and rising rates and all that. So take that into consideration. But given the fact that there is no other competition to Topgolf other than Drive Shack, this is undervalued. This is undervalued. It just is. And they also have a competitive advantage in their putteries. If you guys haven't checked out Drive Shack, I encourage you to do that. They have a puttery, which is like Topgolf, except for it's with putt, and you get to drink, you get to do all kinds of stuff. It's just like Topgolf, only it's with putteries. Drive Shack still has the Topgolf element to it with like the actual driving range side, but they also have these putteries, which I think also sets them apart. There literally is no other competition to Topgolf than Drive Shack. And in my opinion, even though they're still growing and operating for a loss, it won't be long before they're profitable, in my opinion. So long-term play, but it is undervalued, in my opinion. There's my thoughts on Drive Shack. Really love that stock. Okay. Anything else? I know there's a lot of other ones. I'm not going to be able to get to all of them, but let's see here. Over under on, you know what I'm going to do? We'll pause the over unders. I appreciate everybody else. If I didn't get to you, come back tomorrow. I'll try to get to everybody else as well, but tight on time here. So looking at Amazon, I think it was, who was it? Somebody asked me about this. I think it was Milton Williams asked me about Amazon. Why did Amazon not do well after the split? And this is what I was talking about. If you guys didn't catch the video that I put out last week about how you shouldn't be buying Amazon because of the split. I still, and by the way, in that video, I said that I thought that Amazon was still undervalued, but don't expect fireworks after the day after the split. We saw a nice run up into Amazon split, this is so weird looking at Amazon. Let's take a look at the chart here. This is trading at 125. It's so crazy considering this was at 24.77 at the close on Friday. And, it didn't really do much, right? It's up 2%. The day after the split. And I think there was a lot of people that are expecting a lot more. The reason is because nothing's changed with Amazon. It just, nothing's changed. Fundamentally, it's the same damn stock that we saw last week. Literally nothing's changed. It just has gotten some lipstick, right? The window dressing on this has just changed. That's it. It's still, $1 trillion stock. It's still, absolutely crushes it with AWS. Like nothing's changed with that. And that's why I think it's a buy, because of where it's at fundamentally. If you look at AWS and take out the e-commerce side of their business, the AWS side is worth more than what it's trading for right now. That's crazy. That's crazy. And that's why I think Amazon is a buy, not because of the split. So if anybody was expecting fireworks because it's the day after a split, I tried to warn you guys that wasn't going to happen, at least in my opinion. And look no further than when we saw this with Tesla and Apple, right? Everybody got in their feelings and got crazy leading up to the split, and the split happened, and then it just went down, right? We saw a huge drop off in Tesla when that took place. Saw a huge drop off in Apple as well when that took place. But the difference here is that Tesla was way ahead of itself at the time. Apple was way ahead of itself at the time as well. This is coming off of a significant bounce, Amazon is, and I would expect to see some consolidation maybe. We have a bit of an inverse head and shoulders on this one, so I think that certainly is bullish for the stock. But for all those reasons, I'm bullish on it. None of them have to do with the split. So that's why, in my opinion, that we didn't see much movement on that, because in large part, institutions don't give two shits about Amazon splitting. This is all about retail, and there isn't enough retail dollars out there to move Amazon like institutions can. Just my opinion. I know it sucks. We're all the poor people looking at this, right, compared to the institutions, and wondering why it didn't move. And it's because there's so much more money wrapped up in institutions. If the institutions thought this was a bullish call, we probably would have seen, and they participated with retail, we probably would have seen a lot more movement. But because of that, that's probably why Amazon didn't do shit today. I know it was a long-winded answer, but I knew I was going to get this. I was like, I put a video out on it, and people were giving me there was a lot of comments in there giving me a hard time about how crazy I was to say Amazon isn't a buy because of the split. And they misconstrued it thinking that I said it wasn't a buy at all, which is completely false. I said it was, but not because of the split. So I hope that clears some things up for you guys who are watching it or watching now, and maybe watch that video earlier on. But there you have it. That's Amazon. I know we didn't get, I think somebody was asking about COUP, the ticker. Look, I wasn't prepared to react to those earnings because I didn't think that actually anybody was really all that interested in them. I'll do better at this. Tomorrow we have Dave & Buster's. I'll cover that one. Casey's, Smartsheet, Guidewire, Variance, and a few others. If you guys are really that interested in them, I will certainly cover those. So I do apologize if I let anybody down on that front. But Cracker Barrel also reports earnings pre-market. So that's going to be one to keep an eye on, of course. We got some ones that we can certainly react to later on this week. Lovesac, Campbell's, Thor, Five Below, it's slim pickings. We're in the dead, you know, it's going to get really boring here as far as earnings are concerned for the next couple of weeks. But Thursday, there's Neo that reports pre-market, which is unusual because they're usually after hours. Billy, it's another Chinese company that Chinese stocks have done insane. Then there's DocuSign, Stitch Fix, Rent the Runway. Those are all on Thursday after hours. So we do have some things that we could react to if you guys are interested in that. But today there wasn't much going on. So I just figured I'd cover Apple and kind of get your guys' gauge on the market overall, and you can just chat and have a good time. All right. But that's going to do it for me. Thanks so much for tuning in. I appreciate you guys. We'll be back here tomorrow at 3:45 p.m. Eastern time. And I have some other content as well. You know, I listen, there is a potential sign that the end of times are coming as far as the stock market is concerned. It has everything to do with OnlyFans and strippers. Yes, OnlyFans and strippers. You don't want to miss tomorrow's live stream. I promise you that. See you guys tomorrow.